Hello there and welcome to Global Business Africa. We'll be giving you insight into Africa's business and financial markets. I'm Uche Okoronkwo, coming to you from Kenya's capital, Nairobi. Let's start with a look at the markets. Now, global equity markets were pretty flat today, hoping central bank action in the world's biggest economies could certainly temper some of the slowdown in world growth. Nevertheless, improved global investor sentiment certainly helped South Africa's JSE to push higher today in broad-based gains. Of course, an air of caution still remains as investors await Moody's credit rating announcement on a Friday in South Africa. Now, also coming up on the show today, UK MPs vote for 8 alternatives to Prime Minister May's Brexit deal. African banks opt for technology to define their future. And the US Congress begins hearings on Boeing's safety regulations after 2 deadly crashes of its best-selling airliner. Well, we begin with news that UK Prime Minister Theresa May has announced that she will resign before the next phase of Brexit negotiations. Well, earlier on, the British Parliament had just decided to vote on several Brexit alternatives for a way through that divorce impasse. Now, the major options on the table include establishing a customs union and closing alignment with the single market, seeking a managed no-deal Brexit if a withdrawal agreement can't be reached, and revoking Article 50. Meanwhile, the EU agreed to delay Brexit until May 22nd, and that's if Parliament agrees the deal this week. But May's government said it will only bring the twice-defeated deal back to Parliament if it believes it will be successful.
We are continuing to work to ensure that we can deliver Brexit for the British people and guarantee that we deliver Brexit for the British people. We have a deal which cancels our EU membership fee, which stops the EU making our laws, which gives us our own immigration policy, ends the common agricultural policy for good, ends the common fisheries policy for good. Other options don't do that. Other options would lead to delay, to uncertainty and risk never delivering Brexit.
This chaotic and incompetent government has driven our country into chaos. You know the scale of the crisis, Mr. Speaker, when the TUC and the CBI are united in writing to the Prime Minister saying that a plan B must be found to protect workers, the economy and the Irish border. My question on Monday went unanswered. So will the Prime Minister now say what is her plan B? Yeah.
Meanwhile, the President of the European Council, Donald Tusk, has urged EU lawmakers to remain open to a lengthy postponement of Brexit while the UK rethinks its position. The European leaders last week granted Britain a short extension to Brexit, saying that if Britain's Parliament did not back the divorce deal this week, then the government will have to indicate what it wished to do before April 12th. However, many on the continent are against the extension, saying it will disrupt the European Parliament elections, which of course are set to start on May 23rd.
You cannot betray the 6 million people who signed the petition to revoke Article 50, the 1 million people who marched for a people's vote, or the increasing majority of people who want to remain in the European Union. They may feel that they are not sufficiently represented by the UK Parliament, but they must feel that they are represented by you in this chamber, because they are Europeans.
Well, let's get the latest from the ground from our reporter Richard Bestick. He joins us now in London. Richard, great to have you on the show. Now, it certainly was not business as usual at the UK Parliament today. Of course, Theresa May announced that she could be resigning after the Brexit deal. And of course, we saw voting begin on other alternatives to May's deal today. Give us the play-by-play of how that process went. And certainly, are there any alternatives that are gaining traction right now?
Well, let's put it this way. They have now got 8 alternatives that they will be voting on within an hour, and that should then whittle it down and we will return to this place on Monday when they will once again see if they can whittle down that number even further and come up with a plan around which all members of Parliament can coalesce. Now, here's the thing. You were talking there, Uche, about the Prime Minister saying that she would resign if the members of her own party, the Conservatives, would actually back her plan, which has been defeated resoundingly twice already. Now, if she can persuade them, and there are signs that the Brexiteers in her own ranks are getting a little bit nervous when they look at some of these alternatives to Theresa May's plan, there are signs that they're coming on board. And if she can get the numbers right, she could probably bring that plan back for a third time, put it before members of Parliament, if she can get the go-ahead of the Speaker John Bercow, who is a little bit concerned about the precedent being set by a government bringing the same old plan back time and time again to Parliament. But if she can get round that problem and put it before the House, and having promised that she won't go into the next phase, the difficult bit where Britain actually negotiates its trading arrangement with this massive trade bloc, the European Union, on its doorstep, then she will be happy and quit and go away quietly. Well, let's see in the next couple of hours what happens, because we're expecting to hear from the Democratic Unionists from Northern Ireland, who only hold 10 seats but effectively prop up Theresa May's government. If they say that they too would rather have some exit, Theresa May's Brexit, rather than no Brexit at all, then you will see the Brexiteers on the Tory ranks follow them, and Theresa May could be in a position to bring the whole thing back on Friday, win her day finally, and then whatever happened today, this remarkable, unprecedented event that happened today when members of Parliament took over control of Parliament, first time in 900 years of parliamentary business here, all that will be for nothing, and Theresa May will have her deal. But it's not there yet. It's not there yet by any means, Uche.
Well, on that note, Richard, with regards to Theresa May bringing back her deal for a third time to the House of Commons, what are the chances that her deal could win another vote?
Well, at the moment, we simply don't have the numbers. Rather, Theresa May doesn't have the numbers. I mean, if the DUP are meeting around about now, and the likelihood is that they will make a decision. If they say yes, then the Brexiteers on the Tory ranks, the ranks of the ruling Conservatives in Parliament, will come out in favour of Theresa May, and she could get her deal through. If they say no, it's unlikely that Theresa May will get the numbers, and we will then go through to Monday and see what the MPs decided. It won't necessarily be. It won't necessarily end happily just because the members of Parliament have taken control of the Brexit agenda in Parliament, but it could take us one step forward. And you saw there the EU Council President saying that Parliament should think about giving Britain a little bit more time to get its act together.
Well, in the meantime, Richard, the opposition Labour Party, it's also talking about a second referendum, but this time not on Brexit, but on the specific plan to exit the EU. Is that likely to happen?
Well, it's significant. Let's put it this way. It's important because it tells us two things. One is that the opposition leader, Jeremy Corbyn, who is no fan of the European Union, has been finally brought round to supporting Labour Party policy and saying that he would go for a people's vote, a second referendum, if nothing else can be achieved. The other thing it tells us is that the Labour Party, the opposition Labour Party in Britain, is as split as the ruling Conservatives. Everything in the Houses of Parliament behind me has been completely torn asunder by Brexit. Parliament is divided, the political parties are divided, and the people are divided. You can hear them in the background behind me now, over this Brexit issue. Whether Labour's support for a second referendum will actually mean that they can garner enough support within Parliament is a debatable issue. I think that probably it would be a way out. It would certainly mean a long extension on Brexit, but I'm pretty much alone in thinking that it's a way out. There are a number of people who believe it would be even more divisive than the situation we have at the moment.
Well, it's quite a tense situation, Richard. I can certainly hear it in the background. Many thanks for that update. Of course, that was Richard Bastow joining us in London. Let's head back to the continent now. With little over a month to go before South Africans head to the polls, many are still hopeful that the political landscape will shape the country's troubled economy. While South Africa's governing party, ANC, is now poised to win the polls. However, fraud and corruption scandals have wrecked the party's reputation in recent years, causing a decline in its voter numbers. CGTN Sumitra Naidu gives us the details.
President Cyril Ramaphosa took over in 2018, making a number of promises, most of which he's kept. But the economy is still in ICU after years of government corruption, mismanagement and poor policy implementation.
Investor confidence is, interesting an issue. As much as it is an issue of numbers, it is an issue also of emotion. A company can be solid and working, and someone makes an utterance about the company, and investor confidence drops, although people are still working, they're still producing the goods. That's a very simplistic way of looking at it. Likewise, South Africa. And again, I think to an extent, our politicians are our own worst enemy. By number one, there's a lot of misinformation, a lot of contradictory information.
Politicians are making more promises, but there's still very little detail on how they will get this economy back to good health.
It's very difficult to find foreign investors coming in when domestic investors are trying to externalize their own capital. I think the main problems that they need to focus on, governance is important, balancing the economy and making sure that the budget deficit is under control. All of that is important, but the key is really growth and trying to grow the economy. Without growth, you can't get business confidence up.
Issues of state capture and corruption have dented investor confidence. Business and consumer sentiment is also waning on the back of rising costs and electricity supply disruptions. It's unlikely at this stage that the elections in May will provide the policy certainty and the economic growth that everyone is looking for. Businesses are struggling with high overheads and erratic power supply. Consumer spend is deteriorating too. Most ordinary South Africans are no longer occupied with who's in charge. They just want change, a strong economy and jobs.
Government has taken steps to address the Eskom issue. This is probably the fifth attempt at government to do that. But at the end of the day, I believe that government, ANC-led government understands very well that the demise of Eskom probably could lead to the demise of the government.
I think what you're having in South Africa right now is a lot of distributional conflicts, and people want to blame somebody because resources are comparatively scarce, and the country comparatively hasn't grown now for almost half a decade.
There's just over 5 weeks to go before South Africans can cast their vote in the country's 6th democratic elections. Sumitra Naidu, CGTN, Johannesburg, South Africa.
Now let's take a look at some of our corporate headlines today. Kenya's largest bank by customer numbers, Equity Group, has announced a profit of $196.5 million for the year ending December 2018. Now the group's net profit increased by 5% from the previous year, maintaining its position as Kenya's second most profitable bank after Kenya Commercial Bank. And staying in Kenya, the country's cash-strapped retailer, Uchumi Supermarkets, has given its creditors two options. That's to either take 30% of what it owes them or risk losing all their money. In a proposed recovery plan filed in court, the chain disclosed that it's currently facing deep financial crisis and will only survive if its creditors agree to forfeit 70% of their total claims, estimated at about $36 million. And South African gold producer Sibanye-Stillwater is planning to change its primary listing away from Johannesburg. The move is an attempt by the precious metals producer to access more capital as it explores growth opportunities outside its home market. Now, the company is domiciled in South Africa and it's also listed on the New York Stock Exchange. And Kenya's Tourism Regulatory Authority is working with home-sharing business operator Airbnb to ensure its clients register and remit taxes by July 2019. The authority is in the process of registering all enterprises that deal with tourism activities in the country. Well, Airbnb, on its part, has expressed willingness to work with African governments to ensure hospitality through sharing of revenues. And that's a look at our corporate headlines. Well, we're heading into a short break now, still to come. African banks opt for technology to define their future. And Nigeria welcomes an interest rate cut announced by the central bank on Tuesday.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global business, only on CGTN.
Every story starts out like this.
Okay. We'll head up now.
But beyond the rush of the numbers, there's always a more fundamental question. What happened? Who has been affected? When market-moving decisions are made, who's responsible? And why?
Let's get some reaction on ground. Joining us in Johannesburg is Sutra. Hello, Naro.
This is how all stories begin. See how they end. Only on Global Business.
How will your world change today? What happens here? What happens there? Or what do you make happen for yourself? If it matters to you, it matters to us too. Your stories are these stories that need to be told. Africa Live. Find your voice.
Welcome back. Now, a common thread in full-year results from Kenyan banks so far has been a strong focus on tech solutions. Barclays' mobile proposition rocketed from 300,000 to over 3 million clients in just about 9 months, as it lent over $100 million, mostly in short-term loans. But right on the bleeding edge of tech is a conversation about the promise of distributed ledger technologies or blockchain. Well, as CGTN's Ramanyang found out in Kigali, banks are in a race to define what their industry will look like in a few years.
Now, there really is no corner of the financial services sector that has not been touched in any way, positive or negative, but tech. East Africa's biggest bank by assets, for instance, KCB, has 45% of all transactions taking place through mobile. In 2018 alone, it lent $544 million through those little devices. That's 84% more than the year before. The thing is, though, in East Africa, mobile lending is old tech. Blockchain, though, that's a new kid on the block.
And I think we are already seeing some interesting potential solutions to some of the questions. And we in the Central Bank of Kenya, for instance, there are some that we are working, there are some, let's say, projects or solutions, if you may, that some commercial banks have been working with us on. And we intend to make sure that these are appropriately addressed, meaning the solutions, using this technology, and then appropriately we'll regulate it.
Even though those proposed solutions have not been identified so far, it does seem as though Kenyan and South African regulators are a lot more willing to experiment with new ideas. Depending on who you ask, banks are either wary of new technology or they are heartily embracing it.
The challenge now for all industries is agility, moving fast and really making sure that you stay ahead of the curve. That's the challenge. And so really there is a risk actually that the banks may fall behind, and they as a result, the new entrants to the market may overtake them.
That paradigm shift extends to a whole new wave of fintech firms offering financial services that do compete in some ways directly with traditional banks. WhatsApp, for instance, the messaging service that was bought out and is now owned by Facebook, is running trials of a payment service in India targeting both peer-to-peer transfers but even, eventually, retail payments as well. In Kenya, there's been a wave of credit-only, fully digital lenders like Tala and Branch have cropped up, but these companies operate in a legal grey area.
At this point, it's true they are becoming bigger, but I think the point still is, and the concerns are not so much size, because any of our banks is much bigger than all of them put together for sure, right? But I think the issues here relate to customers. The customers at times feel that they are grieved because if they have a problem with the institution, they are not heard, or even worse, that the rates are predatory, that the rates that you may put it differently, the cost of credit is so high that these are actually no longer just creditor or rather lending institutions, they are just Shylocks.
And that is a dark side of fintech. But remember, this is an arms race that is nowhere near slowing down, with new players joining it every single day. Now, a discussion on the first day of this event, Bola Adesola, the Vice Chair of Standard Chartered's operations in Africa, pointed out that that 50-year-old institution isn't just experimenting with blockchain solutions. It has set up a unit in Singapore specifically to invest in fintech products. A key question at this point is if regulators will be ahead of or behind the tech curve. Ramanyan, CGTN, Kigali.
Well, let's go to Tanzania now. The country has directed bulk petroleum importers and suppliers from its northern regions to use the Tanga port instead of Dar es Salaam. Well, this is expected to result in lower pump prices in Kilimanjaro, Arusha and Manyara areas. Tanga Port is now under expansion to increase its depth from the current 3.5 meters to 15 meters after a feasibility study for dredging the port was finalized last year. Now, dredging will increase the port's handling capacity to 1 million tons per year. Petroleum product importers and suppliers in northern Tanzania, however, say that Dar es Salaam port is more efficient than Tanga. The new directive comes less than a year after Energy Minister Medad Kalemani ordered petroleum suppliers in southern Tanzania to use the southern port of Mtwara. In Nigeria, the Central Bank's Monetary Policy Committee has cut its benchmark lending rate by 0.5%. It, however, left other key policy parameters untouched. Well, the committee has been repeatedly criticized for keeping credit out of reach for businesses and, as a result, stifling growth in its private sector. Well, CGTN's Kelechi Mekalam takes a look at what the reduction means to Africa's largest economy.
The move was largely unexpected, but the central bank governor, Godwin Emefiele, says it wouldn't have come at a better time.
The committee was convinced that doing this would further uphold the bank's commitment to promoting strong growth by way of encouraging credit flow to the productive sectors of the economy. The MPC also felt that signaling through loosening by a marginal rate would serve to manage The sentiments in capital flow markets, owing to the wider spread in yields in the emerging market and developing economies relative to the advanced economies.
The committee has resisted pressure to loosen its policy parameters for the past 15 sittings, preferring to curb a double-digit inflation. A single digit has not been achieved, but it's close. Inflation has fallen from 16 to the current 11.31%.
Yeah, we seem to have some level of stability in exchange rates, and inflation seems to be easing, still at double digit, but lower region of the double digit, which is 11 point something, over 11%, not up to 12%. So if we want to reduce interest rate by 0.5%, I don't think if we have so much impact in inflation and impact on exchange rate, but certainly it's expected to have so much impact on job creation.
The committee did not change other policy parameters. Cash reserve ratio and liquidity ratio still stand at 22.5% and 30% respectively. Nigeria's GDP grew by 1.93% in 2018, and the central bank is projecting a 2.4% growth rate this year. Despite the marginal cut in the lending rate, the committee is walking cautiously, giving headwinds facing Nigeria's economy. Volatility in global oil prices, which is the country's lifeline, means the economy is vulnerable. The committee is urging the federal government to aggressively pursue economic diversification to safeguard the gains made this far. Kelechi Amekalam, CGTN, Abuja, Nigeria.
And in Egypt, the country's central bank monetary policy committee will hold its second meeting this year on Thursday. In its last meeting on 14th of February, the MPC cut interest rates by about 1%, while CGTN's Yasser Hakim looks at whether there will be further interest rate reductions in the next CBE meeting.
It's speculation day. Analysts have been predicting the central bank's next step concerning interests, which stand at 15.25% for deposits and 16.25% for lending. Most experts polled by local press and Reuters predict a 1 percentage point cut rate on Thursday.
We believe that the reasons that inflation has actually increased during the months of February is due to only volatile items, which is the prices of vegetables in specific, that is driven by supply factors and not by demand factors. The second reason is the fact that foreign investors have been extremely interested in investing in the Egyptian treasury instruments since the beginning of 2019. We are getting net portfolio inflows of $1 to $2 billion every month from foreign investments in treasury instruments. And we believe that a 1% reduction in interest rate is not going to affect such inflows, especially that we are witnessing a strength in the exchange rate of the Egyptian pound versus the dollar, so the total return for the foreign investors is still very attractive.
The cut rate would attract more investors as it facilitates loans for production purposes. Analysts see last month's rate cut as an indicator of better things to come. The other side of the argument predicts a rate freeze for the next few months, citing an upcoming scrap of energy subsidies that could have an inflationary effect on the market. Some experts opt for keeping interest rates as it is for now.
The only reason the central bank would actually maintain rates would be the fact that inflation in February was higher than expectations and it reached 14.4% year on year. That would be the only reason we view for maintaining rates, especially that we know that the government of Egypt is going to cut subsidies in June, which is going to cause another spike of inflation over the months of June, July.
Whatever the decision on Thursday, both camps are in consensus that Egypt is now strong enough to absorb any economic shocks. It managed to survive last year's exit of foreign investors from emerging markets and is showing strong growth at 5.8% and a stronger Egyptian pound. Most financial institutions have also raised their outlook to B+, showing good confidence in the economic reforms. Yas Hakim for CGTN, Cairo.
And Tunisia is hosting the African Economic Forum. Participants say the continental event will give a new impetus to inter-African cooperation by creating space for exchange and partnership between African economic operators. CGTN's Adnan Shaushi filed this report from Tunis.
The second edition of the Economic Council of Africa has opened in Tunisia. Some 150 participants, including businessmen, state officials and financial experts from 17 African countries, are pushing for increased trade across the continent.
This high-level meeting has gathered African economic decision makers. Together we can boost economic partnership and invest in the continent. We aim to take advantage from huge human potential and natural resources in Africa to revive economies in the region.
The Minister Advisor to the Tunisian Premier in charge of monitoring public projects and programs noted that Tunisia aims to increase the value of its exports to $15 billion in 2020.
Several initiatives have been taken to strengthen Tunisian exports to the African market, including Tunisia's accession to the Common Market for East and Southern Africa, COMESA, and the Economic Community of West African States, ECOWAS, the opening of new air links to new African destinations, and the strengthening of trade via the Zarzis Port project.
Parliamentarians from the House of the People's Representatives in Tunis and the African Parliament emphasized the role of legislation in facilitating investment and business in Africa.
Economic diplomacy is one of the priorities of the Tunisian state. For over 23 years, Tunisia neglected the African market and paid a heavy price. Working in Africa through increased exports of goods and services is a strategic choice. African parliaments will provide the legal framework for business in Africa.
Tunisian authorities asserted the state's determination to consolidate its economic presence in Africa through the strengthening of public-private partnerships, such as the experiences of STAG International, SONED International or ONAS International, or the export of services in telecommunications, technology and consulting firms.
Analysts have considered that the level of African economic cooperation remains low. In fact, inter-African trade does not exceed 16%, whereas this rate is more than 50% in other economic areas, such as the European Union. Adnan Shawashi, CGTN, Tunis.
Well, here in Kenya, industry leaders from various departments came together for the China-Hunan-Kenya Economic and Trade Cooperation Conference. It was held in the capital, Nairobi. Now, during the conference, leaders signed 11 agreements in various sectors, key amongst them the agriculture, technology and infrastructure sectors. The long-standing relation between China and Africa was celebrated by leaders from both sides with a call to strengthen the multi-layered cooperation for mutual benefit. Well, this shared call will be realized with the establishment of the annual China-Africa Expo to take place in June this year in Hunan Province. The event was sponsored by the Department of Commerce of Hunan Province, Kenya's Investment Authority as well, and the Bank of China.
At the end of the day, where the rubber meets the road is when you do the kind of people-to-people contacts that you have at this particular moment of time, this kind of example, and do business between yourselves, because that's the way two countries get to trade and thereby have mutual benefits.
Two markets and two resourceful nations will now be open to each other and deepen cooperation in various areas of business.
You're watching Global Business Africa. Let's head into a quick break now, still coming up on the show. The U.S. Congress begins hearings on Boeing's safety regulations after two deadly crashes of its best-selling airliner. And Asian experts push for structural changes at the World Trade Organization.
Business in Africa is at a crossroads. We celebrate those who are adopting and thriving despite the challenges, from grassroots to big businesses. Global Business takes you along for the ride as we track the making of a giant.
Only on CGTN.
Africa Live. Find your voice.
Well, let's recap today's headlines this hour. The coalition ally of Algeria's ruling party has called for President Abdelaziz Bouteflika to resign, piling pressure on the ailing leader after the army chief demanded he be declared unfit. Now, the move will potentially clear the way for elections to be organized in the coming months unless the president recovers. Meanwhile, health officials now say there have been 5 confirmed cases of cholera in Mozambique in the wake of Cyclone Idai. A UN agency says nearly 2 million people are in need of humanitarian assistance in the country. Cyclone Idai flattened homes and caused a massive flooding after slamming into Mozambique, Zimbabwe and Malawi. Now, the World Food Programme has designated Mozambique a level 3 emergency, placing it on par with Syria, Yemen and South Sudan. And a spokesperson for the Malian government says the death toll from Saturday's attack by gunmen on villagers has risen to 157. Most of the victims were women and children. The International Criminal Court has condemned the attack, with the court's prosecutor saying the crimes may fall under its jurisdiction. Now, the Hague-based court plans to send a delegation to Mali. And the British Parliament is voting on several Brexit alternatives as a way through the divorce impasse. The major options on the table include establishing a customs union and closing alignment with the single market, seeking a managed no-deal Brexit if a withdrawal agreement can't be reached, as well as revoking Article 50. Meanwhile, the EU agreed to delay Brexit until May 22nd, and that's if Parliament agrees to a deal next week. And that's a recap of today's headlines. Now, the U.S. Federal Aviation Administration is facing sharp questioning at the congressional hearings over its oversight of Boeing before and after 2 deadly crashes of its best-selling airliner. Now, amongst those testifying before the Senate Aviation Subcommittee is the Transportation Department's Inspector General, who of course is leading a review of the FAA on Boeing. The Transportation Department watchdog has previously raised questions about the FAA's certification of Boeing's planes and the seemingly close relationship between some agency managers and the airline. The airline manufacturer. Now, the 2 catastrophic crashes have raised questions about the new automated flight control system on the plane. Even though Boeing has made improvements, it still plans to significantly change its oversight approach to air safety by July this year. Now, of course, in a moment, the Senate will hear testimony from the acting head of the FAA and the Transportation Department Inspector General. Let's get an update from Giles Gibson. He joins us in Washington at Capitol Hill. Welcome to the show, Giles. Now, since those 2 tragic plane crashes, the country's air safety regulation and certainly its oversight of airplane construction, they've come into question, including, as we mentioned, the FAA's cozy relationship with Boeing and, of course, its certification of its planes. So, Giles, what do you expect to see from senators at today's hearings?
Yeah, well, that hearing is expected to get underway in the next 25 or 30 minutes, and we'll be hearing from the acting FAA administrator, Dan Elwell, as well as several other US transport officials. Senator Ted Cruz, who actually chairs this subcommittee, he said earlier on that we want to know how Boeing, how private companies are involved in the FAA certification process. We're expecting a lot of questions from the senators on that committee to focus on the MCAS that you were talking about. That's the automatic flight control system that essentially dips the nose down to avoid the plane stalling. Now, there's been a lot of scrutiny on that system as well from the investigating teams who are looking into the causes of both the Lion Air crash, which occurred last year, and the more recent Ethiopian Airlines tragedy.
Now, of course, today we'll also see Boeing present a proposed fix to its 737 MAX aircraft. And coupled with that, there'll also be an independent review by the House Transportation Committee of the airline manufacturer's plans going forward. What do you expect will be the outcome of that, and what is at stake for Boeing given these two meetings?
Well, that's right. As this hearing goes on here in Washington, D.C., on the other side of the country in Washington State, Boeing have been holding a briefing for journalists and pilots and airline executives at their factory where they actually produce these 737 MAX jets. We've just had some details coming out of that briefing on the west coast of the country in the last few minutes. Boeing announcing updates to that MCAS system that I was talking about, as well as more pilot training. Now, it has to be stressed, although they have announced these updates, those updates still have to be signed off. They still have to be certified by the FAA before they can be applied to these Boeing planes and before these MAX jets can actually return to the skies around the world.
Now, of course, Boeing has lost about $29 billion in market value since the two crashes. Some airlines still express confidence in the firm. What's your take, Giles, on whether their efforts to try to rebuild trust will pay off going forward?
Yeah, there have been airlines saying that they still trust Boeing, but we have to remember that there are also airlines who are taking concrete decisions off the back of this speculation about Boeing's safety record in terms of what planes they're buying. Garuda Airlines, based in Indonesia, they've actually recently, just in the last week or so, cancelled a 50-plane, $4.9 billion order for 737 MAX 8 jets. So clearly this speculation around Boeing's safety record is certainly actually affecting the company's bottom line. What they're hoping to do after this briefing on the west coast of the United States that we've just had details from is to try and get these updates to that MCAS system that I was talking about certified, try and get their planes back up in the air, and then try and build up both their share price as well as the general public confidence in their planes.
Certainly. Well, many thanks for that update. Of course, that was Giles Gibson joining us from Capitol Hill. Let's move on now. With the advent of a new global economy, some say the biggest challenges will come from one of the world's biggest financial powers. According to experts, the World Trade Organization is in need of major reforms. While CGTN's Yang Shengqi sought some answers at the ongoing Bastow Forum in China.
As the first quarter of 2019 winds down, the world faces a daunting challenge, especially in terms of globalization. That was the message from a panel of current and former government officials and institution heads.
Now we have a new conservatism in the U.S., and that makes the Doha Round promises even more difficult to fulfill.
The U.S. has accused the WTO of failing to address the issue of industrial subsidies, an argument many believe is directed at China. Former Chinese Central Bank Governor Zhou Xiaochuan responded.
Because the price system in the past have a lot of distortion, then governments have to subsidize this one or that one. But along the reform process, those kind of subsidies basically already eliminated.
Nevertheless, the U.S. bypassed the WTO to wage a trade war with China, prompting many to question whether the international institution can still act as a trade mediator.
The current President of the United States of America is trying his best to undermine the rule of law in world trade. The focus of his ire has been the appellate body of the WTO, the Court of Last Appeal in WTO dispute settlement. He is focused on the appellate body, quite frankly, because the appellate body has refused to do the bidding.
Experts say the need to fix the WTO is much more urgent than many think. Its appellate body, which is responsible for dispute settlement, could fail with 3 of its judges set to retire this year. And Washington has blocked all new appointments to this appeals chamber. Backers suggested improving the appellate body by increasing the number of judges, making it a full-time post, and canceling the reappointment of judges. This is an issue that has to be worked out this year to avoid an existential crisis for the WTO.
What happens if a major country leaves the WTO? Is there still a WTO? Because the option is bilateral trading rules, and that would make the world a mess.
Panelists raised other issues as well. Former Filipino President Gloria Arroyo says developing economies are underprotected as trade creates development imbalances among countries. But nevertheless, they all agree that such differences should be addressed within the WTO framework. Yang Chengxi, CGTN, Boao, Hainan Province.
And now let's take a look at the conclusion of Chinese President Xi Jinping's three-nation European tour. President Xi said after a meeting on Tuesday with leaders from France, Germany and the EU that cooperation has been what he called a mainstream feature of China-Europe relations. Well, our correspondent Stefan de Villiers reports.
On the last day of Chinese President Xi Jinping's European trip, he sat down with France, Germany and the European Commission. All agreed to seek fairer trade rules and to work side by side on solutions over global security and economic issues. But above all, the meeting in Paris was about the future relations and challenges between China and the European Union.
We want to be able to move ahead with the construction of a renewed multilateralism. We have differences. Of course, the exercise of power in human history is not without rivalries. None of us are naive, but we respect China and we are committed to dialogue and cooperation.
The Chinese president stressed the importance of mutual trust in the relations between his country and Europe.
For today's China-EU relationship, cooperation is a defined feature, even though there are differences or competition to some extent. Such competition is constructive, and cooperation always outweighs competition. We cannot let mutual suspicion get the better of us, and we must not always have to be guarded against each other.
One project that could benefit is China's Belt and Road Initiative. Although European countries are still reluctant to join the initiative, some are considering joining it.
Germany wants to participate in the Belt and Road Initiative. I believe this is a very important project. We, as Europeans, want to play an active part in the project, and that must lead to a certain reciprocity.
So in spite of all the differences, the EU and China are now ready to confront the changing world together. And that in itself means a remarkable new chapter in the relations between the two. I'm Stefan de Vries for CGTN in Paris.
Well, let's shift focus now. At the start of the year 2018, many were saying you need to get into Bitcoin. It certainly was the buzz then. Of course, it is the world's first digital currency. Well, needless to say, those people are now feeling a little bit sheepish. Let's take you on the wild ride that was Bitcoin prices in 2018.
Bitcoin is a digital currency without a central bank or single administrator. People can obtain Bitcoin by mining with electronic equipment. The currency can also be bought or sold on cryptocurrency trade markets. Bitcoin wasn't worth much at its beginning in 2008, but its popularity took off soon afterwards. High fluctuations in the price of Bitcoin began to dazzle the world. 2013 witnessed a sharp increase in Bitcoin's value, with a peak price of over $1,000, up from just over $10. However, the currency's price then went through a period of stagnation from 2014 to 2017. Prices started at under $1,000 in 2017 and rose to $13,412 on the 1st of January 2018. Bitcoin's price reached an all-time high of $19,666 on the 17th of December 2017. The higher the price, the more people rushed to mine or to buy Bitcoin. The world was shocked. Bitcoin's price fluctuated between $13,000 US and $6,000 US throughout the first half of 2018. Bitcoin prices kept hovering around $6,000 US by the middle of November. But Bitcoin fell by over 35% in 1 week and is down nearly 80% from its peak last December. The sharp decline shocked the world once again. Bitcoins in circulation on December 17, 2017 had a total value of $327 billion US. A year later, that market cap was down to $57.4 billion US, underlying how much the cryptocurrency bubble has burst. Is cryptocurrency a good thing? Some experts say yes, some say no. It can make you rich in 1 minute, but it can also bankrupt you in another.
Well, moving on now, let's take a quick look at how commodities performed today. Gold prices edging up as, of course, lackluster stock markets and, of course, falling bond yields reflected investor worries about a global economic slowdown, lifting safe haven assets such as gold. Meanwhile, benchmark oil prices edging higher today, boosted by further disruptions to Venezuela's crude exports, which, of course, have helped tighten global inventories in recent weeks. Let's head into a quick break now, still to come. Youth in Nigeria cash in on the growing demand for smartphone repair services. Now, in recent years, Nigeria has been flourishing in the market of foreign manufactured smartphones. Its e-commerce sector is now valued at about $13 billion US. However, there are not enough mobile phone repair centers in the country right now, and many young local technicians are taking advantage of this opportunity. CGTN's Phil Ihaza with a story.
In this noisy, bustling environment, Uche Okoronkwo has been fixing phones for more than 10 years now. He began learning the trade as a last resort after dropping out of tertiary institution as a result of not being able to keep up with his school fees. But Okoronkwo says being a local phone doctor is now one of the most lucrative crafts in Nigeria.
It really paid me a lot. I've achieved so many of my dreams from fixing of phones. And I am working towards my target of owning a full shop where I can be selling phone parts in addition to the repairs and also make it more large.
According to a 2018 report by Nigeria's biggest online retail platform, Jumia, sales of mobile phones across Africa increased by over 70% between 2016 and 2017 and is projected to hit nearly 200% by the year 2020. Millions of people in Africa's most populous nation are active in social media and prefer to communicate via mobile phones, something that has seen a boom in the smartphone industry. However, the influx of these phones into Nigeria has created more pressure on international phone manufacturers to set up service centers for their large customer base.
Service centers in Nigeria are not able to meet the demands of a rapidly growing population of phone users. Many people are now forced to patronize these local phone fixers who are readily available and affordable.
The issue with service centers, they used to delay and the queue is too much. But here, if you can stay here, they tell you 30 minutes, 30 seconds, you get your phone that same time. And if you go home, you don't have issue with the phone.
Now I've been here for more than just 2 minutes. They fixed my phone and you can see it. It's working now. So working perfectly. This one is more preferable than service center.
Unlike all these service centers, they will take the serial number of the phone and give you time to come back. But this one, they'll fix it for you instantly. You understand? When fixing for you, they'll help you and tell you some things that is causing your phone having that problem. So that's why I prefer to fix my phone.
However, tech experts say the government will need to formalize the operations of these technicians while supporting them with the much-needed resources to thrive in the business.
There are quacks and there are the professional ones. Yeah, so the quacks might just need to, just to make ends meet, they try to put up the table and then try to grab your phone, do one or two things. At the end of the day, damage the phone. But if the government can come in, take a step of maybe trying to regulate that, part of this business, maybe get a license for the professional ones, and even train more professional ones through the professional ones that are available, I'm sure a lot of things can go well.
Until more foreign smartphone brands increase their service centers to satisfy the needs of their customers, millions of phone users are left in the hands of these local phone doctors to help troubleshoot issues with their gadgets. Phil Ihaza, CGTN, Abuja, Nigeria.
And to Cameroon now, where a farming initiative is helping train and fund youth living in rural areas to enable them invest in agribusiness and create jobs. Now, about 2,000 young farmers so far have enrolled in the project. It is supported by the International Fund for Agricultural Development. CGTN's Alexandria Majala with the story.
The Youth Agro-Pastoral Entrepreneurship Promotion Program was started in 2015 to promote farming, improve food security, and create jobs for young farmers. Gabriel Eta is among those who enrolled in the initiative. He grows pepper, cucumber, and tomatoes on his farm in Obala, central Cameroon.
I like agriculture a lot, and as an entrepreneur, you must make progress and not stagnate. When the Youth Agro-Pastoral Entrepreneurship Promotion Program gave me funds, it wasn't for me just to concentrate on one type of farming, but rather on different types of farming, which would help other young people, and also so that I could employ other young people.
The International Fund for Agricultural Development and the Cameroonian government offer support for this program by granting $200 to start out. Registered farmers get agricultural training to enhance skills on proper management of finances and running a profitable business.
When I look at how much growth the different types of farming have brought here, I feel really proud. When I plant cucumbers and see them grow, I feel a sense of pride because of all the effort I've put in. I also think that when I put my produce on the market, it will bring me a certain amount of money.
Through this business, Eta has managed to provide employment for 3 other young people. On a good month, he makes $800 from his farm business. He sells his produce to traders who buy in bulk and later sell the vegetables and poultry on the local market.
I like buying chicken from him because he sells organic chicken. What I like about him is that every time I need to buy chicken, he's always ready to sell one. He's not the type of vendor who will tell you to come tomorrow, only to find that he has no chicken.
The program aims to train over 25,000 young people and create over 5,000 agricultural businesses. For entrepreneurs like Eta, this initiative has provided a boost in their income and expansion of businesses. Alexandria Majala for CGTN.